following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 28th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down 81 points at 19,863. S&P is off 15 points. It's down nearly 0.7%. NDX 100 is down 0.7%. It's off 36 bucks. The Nasdaq Composite down 0.8%, off 43. Russell 2000 down 1%. That's off $14. The semiconductor is the leader to the downside, down 15 buckaroonies out here. You've got gold up $2, silver's up 7 pennies. Lightspeed crude is up a quarter. Leading the charge to the downside out here, upside, I should say. Oh, downside. Priceline off $14. That's nearly 1%. Regeneron Pharmaceuticals off 770. Nvidia Corp down 7. Google's off 7. Acuity Brands down about 5. Martin Marietta off about 4. To the upside, Intercept Pharmaceuticals up $7. Weiss Markets Inc., WEIS, is up 11% or 650. Kate Spade is up a couple bucks, 18%. Not sure what's going on there. Gold, Rand Gold is what I should say, up $2 or about 3% to the upside. So where do we begin? Where should we begin is really the question out here. And I think we should be relatively methodical. Well, I know we want to begin first. We did have a request that came in, so let me cover that. Otherwise, my screen will just simply continue moving, and I will bypass that. Of course, if you want to know something, you can't call in, send me an email, steve@tfnn.com. I'll be happy to go take a look at whatever equity it is, currency, commodity, whatever it is. So the first request was from the Mystic One. I wanted to take a look at the Banach Vectors Russia ETF. RSX is the ticker symbol out here. Now, the only thing when we take a look at this chart here, you know, what I would normally like to do, but I don't have the ruble. It's going to take me a little while to get that chart set up for you, is to take a look at what's going on inside this equity and understand what's going on in the ruble to understand the influence of currency, because you might really want to. And so my suggestion would be anybody who would be trading this ETF to make sure that you are looking at both and trying to understand what patterns are out there. First, just make sure there's a correlation. If it's not, then just simply ixnay it, get rid of it. But in the case, because currencies are going to rule, in this case here, I don't know the answer to that, but I want to be able to throw that out here. Here's what information I can provide to you. It's trading right now at $20.11 out here. It's inside its TAS Daily Profile, which formed out here back on December the 14th. Brand new box, has a bias to the upside, bullish bias, meaning that the point of control, the little dash line, is closer to the bottom of the box. So I would say, based on this chart here, that this should be able to make it to 2180. Now, you had a big move to the downside I'll say big move off of that TAS daily profile that had 27 million shares. And today you're up with 2.5 million shares. So that certainly does not look good, does not bode well. So you are into, a bit of a supply line area. What you don't want to see is this close below 2065. If it closes below 2065, then 1943 would be where this would head it. But my suggestion still is go take a look at this equity, go take a look at the ruble versus the U.S. dollar, and see if that is something that you also need to be concerned with. Now, with regard to volume or lack thereof, what we know is that, that's interesting. I get this whole thing is pretty messed up on the right-hand side here. I'm not sure how I did it, but I did it. Let's take a look at the SPY, just as an example. With the markets off, if you were a person that was only going to make their decisions based on volume, then what you would be communicating to yourself today, based on this move lower, is you would be anticipating that this market is going to go ahead and bounce. Not maybe bounce right here, but bounce from a level of 223.59, 223.23. You say, why? Well, I would say because that's the bottom of its TAS daily profile, and I would say it's the top of the weekly profile. Should be good support. Volume today, as an example, 111 is when we're going to give you that volume statistics, 32 million shares. Last time down here was on December 16th, and that was 156 million shares. All right? So you'd say coming down on light volume. Remember that date of December 16th, because I will say, don't just use one indicator out here, because there's actually a huge, did I say huge? Huge difference between December 16th and today. Not just the mere fact that it's 2 different days, but one thing is, and I don't show this to you too often because it doesn't come in play that often, but it is in play right now. Let's, we take a look at these great tools that John Logan has provided us with, these TAS boxes. We utilize them on multiple time frames out here. Here is a tool for those of you that use the system. If you use the market breadth system, I'm now looking at the, and if you watch us on Tiger TV, it's really the top portion of the chart that I'm paying attention to, because here this is giving us our daily market breadth out there. The number of issues above their box, a number of issues below their box. I sort of don't really care what's in between out here. And not that maybe you shouldn't care. I'm just saying I don't care. And this becomes easier for me. Now, remember we said December 16th. If we take a look at the day of December 16th out here, what you're going to see, the green line is above the red line. Duh. No, look, that is really important here. In fact, the last crossover we had, this would be considered a bullish crossover. So it's another way to take a look at market breadth out here. That bullish crossover formed on November 8th? November 7th. So you had a bullish crossover on November 7th. Today, as we speak, right now, 113. I do not know what this number is going to be at 4 p.m. I am interested in knowing what it's going to be at 4 p.m., and so should you, because this could be another, this is another signal that a change in trend has taken place. Now, this crossed over earlier in the day, but you can see it on the, that didn't work really well. How do I do this? How do I get out of that mess? There we go. I'm just going to go ahead and blow it up. We'll just take a look at this area right here. So you can see here is where the crossover last occurred. Now, on December 16th, we didn't have that. So I would say volume-wise, if you were a volume aficionado, you would say, bounce because you don't have any volume to the downside. This is a different picture out here. This is a much different picture. We're looking at the daily chart, and we're looking at the stock market breadth of our TAS profiles. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets.
The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, the chart that's on my screen right now happens to be the NDX 100. So we're looking at 100 stocks out here. And before we went on the air at 1 o'clock, we did not have what we'll call a bearish crossover. Remember, this is a daily market breadth chart that we're looking at. So this is only going to matter at 4 p.m. out there. So because much can happen during the day. But if we do end up with this crossover, it will be yet another signal. And it'll be one of those signals that says, volume, schmolium. Well, sort of it will say that. And that's what Stevie would say, that it's different with regard to taking a look at what the meaning is today versus as we took a look at the last time that the market was down with some light volume out here. So you'll want to pay it. This is the NDX 100 again, as I said. So there's 20, just to give you an idea, there's right now, it continues to change. So now it's 21 below, 21 above. So it's going to be a close call here, but something, my opinion, that we want to go ahead and pay attention to. Now, that's what's going on the daily charts when we take a look at the S&P and the NDX 100. If we go take a look at what's going on inside, let's go to some ultra short, or not some shorter term charts. So we'll just take a look at the 30-minute chart. Maybe we'll go down to the 10. I see some folks taking a look at the 10-minute charts inside the den out here. Is there any real signal on a potential bottoming type of pattern because the market's moving down on light volume? Well, we've got the A to B equals CD pattern that we can take a look at. And as we do that, you can see that right now we're at about the 1 to 1.618 A to B equals CD on a 30-minute chart. No bullish reversal signal. If we were to get one and somebody were to say, where would price bounce to? I saw a little bit of that question inside the den. We would first take a look at the TAS profile on a 30-minute, the bottom of it, which is 49.41. You'd also see that oscillator and change line around 49.48. So that would be the range that you would be looking at inside of the NQ if you were using a 30-minute chart. But if you're not using a 30-minute chart and instead you're using a 10-minute chart here, let's go ahead and pull that over. One thing that we do know, not only is it light volume moving to the downside, but we do also have price pushing lower with less energy. Two different scenarios out there, two different elements altogether. Here, though, this pattern is still, we'll call it in the hands of these sellers because price has not closed above Stevie's oscillator and change line. 49.31 is what we'll call it. Has not closed above the top of its TAS profile, which is 49.34. So that would be the area that I would be watching. If you see it close above 49.34, then the 30-minute chart in essence would kick in. Otherwise, it is truly sellers that are in control of this market, and they have not let their foot off of the gas pedal, so to speak. Same thing, really. Let's go take a look at the ES Mini out here. Let's go see what it's doing, just to give us a feel. Is price moving lower, doing less relative energy, and voila, it is. Nice little bullish reversal signal at about what was this here? Let me get my crosshairs going. Looks like that was around the 1 o'clock time frame out here, but price still unable to get to turn up its price oscillator, and so 22.48 is that number, but price is inside its TAS profile, 10-minute profile. And you do have a little TD setup 9 count that's out there. So it's showing signs of a bottom, a confirmation of that bottom. Now, when I say bottom, we're staying within this 10-minute chart here. Let's not get carried away. That would require a move above 22. We'll call it 22.49. You need to see it close above that. Actually, 22.49.50 would be good. Then you get to 22.51 out here. So for those of you that are intraday trading, there's no signal here as of yet. It is still sellers that are in control of this market. It's really confirming what it is that you and I took a look at a different market breadth chart. If we're just exclusively going to take a look at volume, well, it's just not there. But this is the time of the year where sometimes you have to expand, and I do mean expand, not just because you're eating a lot, a lot of stuff, bad stuff for the most part. If we're eating good stuff, that's actually good for you. Bad stuff is bad for you. Hey, they don't call me a Rhodes Scholar for nothing because they don't call me that. But enough of that. So hopefully that assists you with regard to what the markets are doing. And yeah, as Marie said, dark chocolate is good. It is very good. Bad for us, but probably bad for us because who needs all that sugar? But on the other hand, good for us. So end of day is going to be really important out here. Now, what else can we expect? And yesterday what other areas do we have to watch? Well, it's very simple. We have to watch 22.58. Any bounce out there in the market, 22.58 would be the gift of the sell inside the S&P 500. Inside the NQ would be 49.41. If the NQ is able to overtake that 49.41 area, then it's going to be game on again to the upside out here. So watch 22.59 inside the ES Mini. Watch 49.41 inside of the NQ out here. But probably, more likely than not, those become levels of resistance. That's where the bounce would just simply thud. It would stop right then and there. So we'll take a look at some other things. I want to make sure that I field your questions out here. But let's go take a look at some other things for the next couple of minutes out here. Then I'll go check my emails and things of that sort. Let's go see what else is moving in the market. So We've got. Let's take a look at some of these mining. Let's take a look at the XAU. Actually, I know one of the things that we could do. We'll do it during the next break. But let's take a look at the XAU. Let me switch to a different set of tools out here, a different set of charts. If we take a look at the XAU, which we're going to do, I'll pull this chart over here. Now, this was forming. Just so when we looked at the 10-minute charts, we saw price moving lower, doing less relative energy on a 10-minute basis. Important pattern out here, just like at the top. Inside the XAU, forms wave number 7 to the upside. Price moves higher, does with less relative energy, just like the most recent bottom that had formed out here. Now we've got the XAU with a nice bottoming formation. If you were going to ask me, where's the XAU headed to, we're going to say it's going to be that green horizontal line on our chart out here, and that's going to be in the price area of about 82.77 out here. So you've got a nice little gap to the upside that had formed yesterday. The GDX still has its island bottom formation out here. So the mining sector is giving us a gift and communicating to us that a bottom-worthy pattern has indeed formed. You've really got the same thing going on when it comes to the 30-year Treasury out here, but I have to switch to a different chart. I didn't want to do that just yet. Instead, let's take a look at light sweet crude. Let's go take a look at it, see what it is doing. Looks like light sweet crude here is trying to make a break for the most recent swing point that formed about 2 weeks ago. Trading session out here was on December the 12th, as it made a high of 55.44. Now, if it can get above that level, I don't know that it will. If it can get above that level, then where price would head to, you probably want to hear this or don't want to hear this, depending on what side of the trade you would be on. But see, that would be a break of a consolidation pattern. That would just be one pattern that we would take a look at as far as where a price projection would head to. But if, in fact, you were to get above that high, that says price heads to about the $65 area. But what light sweet crude really needs to do by day's end, or some days end, it's got to close above its TAS daily profile. 5404 is the number. You're trading at 54.19. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Dano in Clearwater writes in, says, if you get a chance, we're going to have the chance. We're going to do it right now. Dano, can you discuss this one on your show? I'm short this stock, which is AKS Steel. So as we take a look at it, we'll take a look at the pattern. The first thing that I'm going to put up on our screen, we're going to go to my Ninja Warrior. It's not Ninja Warrior, but Ninja Trader chart out here, where we utilize some different tools, and those on my E-signal charts. We can see that in the case of AKS steel out here, we can see that price was moving higher, doing with less relative energy. Let me get my crosshair out here. Now, right here on the trading session, looks like December the 8th or 9th. Unfortunately, this gets a little wobbly here with regard to my dates, but you can see when that bearish engulfing formed, that was your bearish reversal signal that this had formed a top. Now, because of the tools that we're able to utilize out here, we're able to say to ourselves, okay, this has formed a top. Where should price head to, right? Because we're going to go take a look at where's the first level of support out here. So this should help you, Dano, in understanding why price is kind of bouncing in between this range of 994 and 1097, because price went right down to the first level of support and basically held there. Right, it was the bottom of this brand new box that formed on, which looks like December the 12th out here, and that's in that 994 level. So although you are short, and I'm not saying that this chart says that you shouldn't be short, because it actually suggests that, okay, I get that trade. The problem I would have with a short trade in this specific stock is that in order to really clean up and make money on this thing, it has to go out of business, right? It's an $11 stock. How far can it actually fall? I mean, you got a percentage thing. I mean, I get it, but I would say I would be very cautious about shorting something under 30 or 40 bucks. I'm not referring to inverse ETFs and things of that sort. I'm referring to where what you are shorting is, in fact, the instrument. That is the underlying equity out here, because it just, there's, and especially in an $11, somebody could come along, buy these guys out. I'm not saying that it's going to happen in the case of this particular equity, but there's just so much upside potential and downside. These guys aren't going out of business. It has somewhat limited potential. But nonetheless, with regard to the short position that you're in here, you really want to be able to see price break below, close below this 994 level. Otherwise, the trading range is 994 to 1091. So it does have a topping-ish pattern. If we disregarded price altogether, we would say, yeah, that's a good trade to stay in. Now, if we go take a look at volume, last time that price moved down into the bottom of that box out here, what we will see is that it was moving down with about 21 million shares. That says the next time price starts to move down to that level, you'd sure like to see this thing move down with more than 21 million shares. If it doesn't, and it holds 994, then you might want to take the profits that you would have built up into this thing. I see your target is 864 out here. And at 864, I'm not sure what that target is. I'm not going to spend too much time taking a look at it, but maybe it's a retracement level or something along those lines out here. Watch the 994 level right now. Inside this price containment area, it is sellers that really are controlling it, with that point of control being closer to the top of the box. You don't want to see this close above 1091. You most certainly don't want to see it close above 1139 and do it with more than 31 million shares. Then this is saying you do not want to be short this specific equity. Ticker symbol there is AKS. So, Daniel, the only thing I would say is look for stocks that are priced a bit higher than this. Look at $30 and more or something along those lines. Okay, so that was for Dano in Clearwater. Best of luck on that trade out there. Just going to check real quickly. I don't see any other requests at this time. I don't see anything else inside the Tigers Den. So let's just, because, just here with you today and then tomorrow before we are off again, what else is it that Stevie is looking at for confirmation out here? I'm looking, so I pay attention to, I talk about the price oscillator quite often, or the oscillator on change line. Each day, what I do, I've shared this with you guys once or twice before. Each day, these are the entire listing of the Dow stocks out here. And each day, I take a look at each individual stock. And that don't really mean I take a look at each individual stock. I take a look at the sum of how many of the Dow stocks have a price oscillator above zero. The difference between two exponential moving averages, 19 to 39 in this case out here. And I take a look at how many are above and below. Well, in this case here, it's much easier to count the ones that are below. Visa, Merck, Procter & Gamble, Johnson & Johnson, Nike, Coca-Cola, Walmart, and Cisco right now. That's a total of 2, 4, 6, 8 issues, which means one more has joined the group here this morning, probably Cisco out there. Now, that gives me a total different view on what's going on inside of the Dow. The market indeed has formed a top. If it has formed, I take a look at it, and so therefore I know it's like about 73% of the issues are above zero. A price oscillator above zero is bullish. A price oscillator below zero is bearish. If we just use that as the basic, simplistic understanding of a price oscillator, that alone is a nougat, not the N-U-G-T, but it is a piece of information that is very valuable to you. Yeah, I know. Get on with it already, Steve-O. Well, if we take a look at all that information, that's the black line that is on my chart that is measuring the percentage of Dow stocks that are above zero, 73.33% to be exact. When that has its own little crossover, which it has not yet, it could if some other Dow stock slips into the negative pile out there. Then I would see at the end of the day a crossover of the black line and Stevie's other red line that is out there. And at times in the past when we have seen those crossovers, they have some meaning, especially with everything else that you and I took a look at inside of the markets yesterday. We don't have that just yet. It could easily happen at the end of the day. It could happen tomorrow. When we do get it, it's just one more additional signal to add to, it doesn't matter about the volume out here. The market, in essence, will have turned. Now, as you know, you and I are expecting, we are anticipating that the market is going to form a top. The duration or the length, the level of which we're uncertain about, just how deep will any, so when I use that word correction, some people might, go bonkers with it. We're just going to take it as identifying when the market turns from bullish to bearish, and there are too many other long-term patterns that are out there. And seasonally speaking, we're only talking about maybe about 30 calendar days or so before the market would typically form a bottom. So let's not get carried away here. And I see people, you know this, I see people on TV, for goodness sakes, that keep continuing to take a look at today's market and compare this to Ronald Reagan. They need to get their head out of their, where they've got to get there, because this market has no similarities whatsoever to Ronald Reagan, to George Bush Sr. That is the pattern that is really in play here. It has nothing to do with Ronald Reagan. Everybody wants to be Reagan-esque, a movie star out there. I don't want to be a movie star. I don't want you to be a movie star. This has nothing to do with Ronald Reagan. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow's off 72, S&P is down 15. The reason I don't want you to be focused on Ronald Reagan-esque type of market, if you look underneath the wrong stone, you're going to find the wrong worm. I think that's one underneath the stone out there. And this market is not even close to emulating what happened when Ronald Reagan was elected as president. The market that this is emulating is one when George Bush Sr. took office. At that stage, between election day and inauguration day, the market had moved about 5.5%, 6%, as I recall, somewhere in that range, and we're a bit higher than that right now. But maybe if the correction started here, maybe we get really right back into that range out here. Now we had a request inside the Tigers Den from Danny in hot Atlanta out here, wanting to take a look at the euro, and we will. The first thing I'm going to do is take a look at the euro futures contract. That's why I've got no delayed date out here. But what I can also show you on this chart is a series of patterns that is out here that Danny would suggest that the euro is trying to form a bottom. And I can't do that really as easily when we take a look at my e-signal charts out here. Now, you may say, what do you mean, Steve-O? Everybody says that it's going to par. And maybe it is playing a round of golf and it is going to par. But right now, what it has to contend with and what it's doing, even though it is trading lower as we speak, what it did generate back here right around December 21st, it formed a TD setup 9 count. Oftentimes, those can be areas where the market will go ahead and reverse or bounce. We at least saw the bounce or a bounce take place. We can see there's plenty of sellers out here. Just look at the session on December 23rd. Right? Inverted hammerish style candle. But if we just, and you and I, we always look at the body of the candle because that's the essence of price out here. But we don't ignore the wicks, right? We can see that sellers were really in control of that session. But price did get above the Stevie's red line, right? That is the oscillator unchanged line out here. And that says that price oscillator is trying to turn up. Today is nothing more than a test of that level. And if it holds, it is what we'll have to call short-term bullish out here. But what But price, when I say short-term bullshit, means that price still has to be able to overcome its TAS profile. So let's go switch this now back to the that's going to be the continuous contract, but it's going to be the same or about the same out here once those profiles form. So this says a bounce up to about 105.83 as long as price remains above that oscillator on change line, because the oscillator on change line helps us know if the price oscillator is turned up. I know I'm using a lot of oscillator kind of talk out here, but this is a technical analysis. So, and I think you get it. What happens if it falls below the red line, then that's a real bummer out here. Bummer for longer traders, and time to high five if you're short, because then I would say there's nothing more, I would say nothing more bearish than a price oscillator that is below zero and falling, and that's what would occur right at about the price level, Danny, of 1.0429 to be exact out there. So right now, today is nothing more than a test of support that has held, as we know, as of 1:45 in the afternoon. I hope that assists you with the way that you're taking a look at. AG, right, Steve, can you explain why it is more a Bush Senior market than a Ronald Reagan market? Whew. Yeah, I can. I don't know. Look, this is my series of charts here, AG, that I've got to go through to figure out where it is I put it in there. It's a lot. I try to think logically, and sometimes if you ever put something, you say, I'm going to go ahead and put this in a place where I'm not going to forget where it is. Have you ever done that? And maybe I'm the only one who's ever done that. And then you go to that place to find, and it's not there. And then you've got to think, boy, where was that really secure place that I must have thought about back then? So I tell you what, in about 4.5 minutes, and the reason I'm going to answer your question without showing you on a chart, because you know that I just tell you the straight poop and scoop out here, and then during the break, I'll see if I can go find that for you. It is because you and I, we've all gone back and we've taken a look at all of the first-term presidents out here. I have, and I know I did this with you. And we took a look at what typically happened between Election Day and Inauguration Day to see, this is a Trump thing. Is there an analog to any other patterns that are out there? And I especially wanted to do it because I was tired of hearing people talk the talk, which was no talk at all, quite frankly, on the boob tube out there that kept saying that this was just like, but when the whole Ronald Reagan thing, when we looked at it, we said, hogwash. It was, the patterns were not even close to similar out here. It's just the media wanting to do, they like to think they're great basketball players out there. They think they've got, I don't know who the they is, but you know what I mean. They've got that great. Have you ever Googled, Michael Jordan, best head fake ever out there? You really should, because it's pretty cool. He really gets the defenders going this way while he's going the other way. And that's all that these folks are doing out there. And I heard somebody else, who was it? The Dr. Doom. What's his name? Is it Dr. Doom? Somebody Doom. What's his name out there? Gloom, Doom, and Boom, and something like that. Fireworks out there, and the reality. And again, there was another, and I wasn't really listening. I saw some stuff on the screen out there, and I hit my head just like that. In case you didn't see it, it was just like that. Sometimes you actually have to take your head, knock it against the wall, and just say, what are these guys continuing to regurgitate out there? Now, look, I can't control the markets and what they're going to do next, but I can tell you one thing is for sure, that this market condition that we're in right now has nothing to do with anything that even looks like during the time period that Ronald Reagan was elected and between the time that he was inaugurated. It looks exactly like what happened when George Bush Sr. And by the way, if we go back to that time period, you're going to see that the market just flew. I mean, just flew to the upside out there. And I believe our markets are going to do the same after this normal seasonal cycle adjustment period that it has to go through. Last year we had the China doom, gloom, and boom thing, where the market just really went into the toilet, worst start to January in history. Yet we're way above those lows out there. That's just how important that annual cycle pattern is and can be out there. So let's not try to figure out the depth. Let's have some targets with regard to where the market can go, but let's be ready to change to the other side, use these different tools like you and I use, such as, even just taking a look at that great market breadth tool that John Logan has created for us, which we don't see daily crossovers too often out there. And so we want to pay attention to those. So that's the reason why, AG, and during a break here, I'll see if I can go find that chart, figure out which drawer I put it in, because I know it's out there, because I know I want to be able to go back through it, and then I can show you, some of the other different presidents out there, and that will answer that. But if I spend the next minute here, take a look at some of these other indices, which I'll do. I'll punch up another screen just to give us a feel. We've got basically topping patterns kind of all over the place. We don't have it really here inside the NASDAQ composite. It hasn't completed. All it's done is completed a fourth wave move to the upside. Not that that's unimportant out here, but price is below the oscillator on change line at 54.75. You close below that at the end of the day. Not a good thing. So maybe price inside the NASDAQ composite's not going to go and hit the 118 to be equal CD at 56.07 out there. I really thought that it would do that earlier this morning. But at this stage here, the game is maybe over. If we take a look at the advanced decline oscillator reading, very bottom panel of the chart, we can see it's now at a minus 48. That says that the bulls fumbled the ball. And they fumbled the ball. It says it's given us that indication, volume or not, that a market turn has formed. It has come. It is here. It is here, right here and now. Now, the key is going to be end of day. Folks, if the market ends up worse and down 79 points where we're at right now, the market has spoken. See Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Here the chart that's up on my screen. Happened to find it. I stored it in the drawer, believe it or not, called Presidential Election to Inaugural Cycles or something along that line. So pretty easy to find. But this is a weekly chart, by the way, as opposed to showing you the daily chart. And what we can see here, Bush Senior. Again, this election cycle, we want to try to understand. We don't really care who the presidents are. We just want to understand what the stock market, may or may not do out here. But if we're going to go ahead and compare, we're not near to Inauguration Day, right? That's like around the 16th, 17th, something like that. So when we get there, if the market is anywhere at 5% or more above where it was on Election Day, then this is going to more emulate the market, I should say, more emulate what took place during the Bush Senior. Ronald Reagan, as an example, is a flat market. It was up 1% out there. So we've got plenty of long-term patterns that still need to be completed, such as the S&P getting to 2,500, and I suggest now here is now just to make sure that we're fair, honest, balanced, that whole shenanigans out here. There are cycle periods that don't work. What do I mean by that? Well, during that Bush scenario out here, what we know is that there was no January pullback of any significance out here. I mean, if you want to call significance inside the Dow from 2368 down to about 2241, then yeah, okay. But really was more of just a sideways move out here. And then it was off to the races into the next cycle, which was the middle of July. And that's where I believe that the market will end up topping out this year. The S&P 500 has every opportunity to get to that 2,500 range, 2,450, 2,500, 21, 22,000 or so, whatever it is inside the Dow as we come into this next July. So you can put Mr. Boom, Gloom, Doom, and all that stuff out here, and I'll be happy to go against him and say, well, you say this, but this is really what the market looks like out here. In any event, let's see if I have any other questions in this last 2 minutes. And I just want to make sure that you have a different viewpoint that is backed up with charts and patterns, because you and I are technical traders out there, so that you understand that I'm really just not pulling this stuff out of, my arse, if you will. Okay, so I don't see any other requests that have come in. Of course, it is light volume, so end of the day is going to be, I can't harp on just how important that is, but anything that's, the market, the Dow is down minus 70, it's really giving us a signal that the top is in, and you'd want to, instead of buy every dip, you'd want to be selling every rally and anticipate that it goes on through about the January 30th type time frame out there. So, what else do we really have? Take a look at the VIX. Where is the VIX headed to? I know there was a question about the VIX. Where is that headed to? Where do we want to watch out here? And what's today's percentage gain? Today's percentage gain only 7%. Of course, if you have a greater than 10% gain in one day, you can anticipate that you're going to see a bounce inside the futures market, inside the ES mini out here. The number to be watching inside the VIX index is going to be 1330. 1330 is the 50-day exponential moving average. If price gets above that 50-day line, that's the yellow line on the top portion of my chart out here, then things will really start moving to the downside inside the S&P 500. That's where the real carnage is or can be done. And then you'd look at the VIX moving up to about the 1659 level. Again, right now you are trading at 1288. The number to be watching, 1330 to be exact. So, folks, if you're getting ready to begin your travel, your New Year's travel safe. Tune in again tomorrow. That's assuming you're going to stay tuned in for the rest of the day. And we'll give you the scoop as to what the markets are doing right then and there, and both sides of the trade. So have a great afternoon. We'll see you on Terrific Thursday, 24 hours. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.